Alright, today is Tuesday, October 20th, and this is a post-market review for the stock market activities today. Here is the agenda of the day, and we will of course cover the earnings that we had throughout the day. And before we end in the conclusion of the video, we will preview some of the earnings we have tomorrow. In addition, of course, we do have a new chart to review today, which is the chart of GM General Motors. Since the stock did a big move today, I thought it'll be nice to cover the chart. With that being said, here we go. The diamonds in the green, 113.37 or a gain of 0.40%. The Nasdaq also in the green by 37.61 points or a gain of 0.33%. How about the S&P 500 in the green, 16.20 points or a gain of 0.47%. And here we go with the sector's performance. Almost everything in the green, exception of course of healthcare, which managed to close barely in the red. But the gold medal goes to energy. How about that? And the silver for financials. Lastly, the bronze for basic materials. So these are the unloved sectors leading today, which is a very defensive day from reading the sector's performance alone. And we have seen a notable decline in the US dollar, which probably helped these particular sectors. But here we go with the laggards. Healthcare, consumer defensives, and technology. What's going on in the futures market? Starting with grains, you see soybean oil finally bouncing from a few days of losses, and you see grains across the board in the green, with exception of rough rice, which has been having a rough couple of days. How about metals? Dr. Copper in the green, big pop for Dr. Copper. So did platinum and palladium. However, we see gold being muted, gold being the mature adult person in this party. Gold doesn't want to celebrate unless we know what's going on with the stimulus deal. Yet of course copper is celebrating ahead of time, assuming that we will have a stimulus deal happening very soon. You see the divergences in the market, and we will discuss which name is telling the truth here. Meats. You see lean hogs declining, having a big whack. Of course, this is a name that have been outperforming significantly for the last 2 months. And you see some profit taking here in lean hogs. And we see feeder cattle making a bounce from yesterday's losses. And here is the action in softs. You see OJ barely in the green, yet lumber, coffee, coca, sugar, cotton all in the red. Bad day for softs overall. Moving on to the big casino, the options market, and right away Apple leading the day per usual with 1.4 million contracts traded today. 69% of those were calls. Tesla at number 2 with 917,000 contracts. 66% of those were calls. How about NIO at number 3, 384,000 contracts with 70% of those as calls. And the volume leader, of course, Apple. This time around, they're still buying the 120 calls expiring this week. And of course, this is all stimulus dependent. If we do have a stimulus by the end of the week, Apple would be well above 120. No stimulus, Apple would be well below 110. So big range here for Apple, because with no stimulus, how the hell are we gonna buy the new iPhone 12? Let's check on the change in open interest, starting with the increase in open interest. Here is a name that I have in my portfolio, Freeport-McMoRan, FCX. Having a great day today, of course, due to the rise in copper. But our traders, option traders in this case, seeing something different here, because they're buying the $10 puts expiring January 21. Now, when I see this kind of action, of course, all I did today is take some profits from my FCX holdings. Of course, I've been holding and buying FCX since it was trading at around $11. So taking some chips off the table and buying some protection by buying puts. Here is another trade. Snapchat buying the 31 calls expiring this week. This is of course an earnings play, and it played pretty good so far because you see Snapchat is exploding higher after the bell due to their earnings, which we will cover during the headlines segment. What about Microsoft? We've seen bullish activities, lots of bullish activities yesterday in Microsoft, and now we're seeing it again today. They're buying the November calls. This is a very interesting trade. Of course, it is a spread by the same trader, buying the 225 and selling the 235, and these are of course expiring in November. And the majority of plays in Microsoft in the options market that I at least observe are expiring after the elections. So perhaps there is something here related to the elections. I can't quite figure it out, but we do have an upgrade today for Microsoft from the analysts, and that goes hand in hand with the call buying activities that we've been seeing in Microsoft recently. What about the decrease in open interest? Right away we see Uber. Uber had a big day today, and now they're closing the 37 calls expiring in November after the elections. The elections of course are a pivotal point for Uber, and we'll talk more about Uber when we cover the heat map analysis. I'll give you a little bit of light on what's going on with Proposition 22, which will determine how Uber will operate in the state of California. You know that I am bearish on Uber, or at least I'm buying the 35 puts, and I added to my position today because I am skeptical, and you see traders here taking profits. So we'll talk a little more about Uber in the heat map analysis, but let's move on. Here is ExxonMobil. They're closing the $40 puts expiring January 21. Lots of activities here regarding ExxonMobil, and most of them are bullish. So again, that reiterate the thesis that a Biden win would be good for big oil, because he will curb the supply, at least the domestic supply, and this was the problem for the oil sector the last couple of years. Moving on, we see Apple, the 125 calls expiring in March 21st. Closing that one, very interesting here. And a bearish trade, certainly, at least for the person closing these calls. And lastly, let's cover some interesting trades that I found for you. Right away, you see Las Vegas Sands. This is an earnings play because we do have Las Vegas Sands reporting earnings tomorrow. They're buying the 49 calls expiring this week, plus the 50 calls expiring in June 2021. A long-term outlook right there. But we've also seen, if you watch the weekend video, we've seen bullish activities in Wynn Resorts, and you see Wynn Resorts popping higher today. Of course, we'll talk about Las Vegas Sands earnings in the conclusion of this video. We do have an earnings preview in the conclusion. But here's the last trade of General Motors, GM buying the $40 calls. You saw GM having a big day today, and here they are doubling down on GM. And these are of course expiring next week, so it is very bullish here. They're betting that GM will move heavily in a week time frame, which is a little too optimistic for my taste, but to each his own. Moving on to cover the headlines that shape the day. And right away, let's cover the subject du jour, the stimulus fiasco. The roller coaster between we have a deal, no we don't have a deal, and we're talking and we're talking and we're talking. We're sick and tired of this bullshit. Finish it already and give us a final decision so we can know what to do with the market here. But right away in the morning we heard from Propaganda Minister Kudlow, and he said that Trump wants a deal, but he wants a deal on key areas. And of course the key areas are the $1,200 checks with Trump's name on them. He wants that. That is the most important aspect of the deal for him. And as the day progressed, of course, we started to see the development of the talks about the talks about the talks. And now Nancy, remember Nancy played tough over the weekend, giving everybody an ultimatum that she's giving 48 hours deadline and all that crap. Well, now Nancy's saying, never mind, we'll extend it for maybe next week. We're gonna keep talking about talking about talking. And of course, Nancy did an interview with Bloomberg, and she said that she is optimistic about the outcome of the talks. Right away, you saw a big pump in the market, and I'll show you that when we cover the charts. That pump, of course, faded as we got closer to the closing bell. And as the day started to progress even more, we heard more details about the talks. And Nancy, who was optimistic 5 minutes ago, now saying that the liability provisions differences remain. And it didn't take long before we heard from the rest of the GDP, or the GOP rather. The GOP, of course, they're trying to cover for their asses. Their whole marketing issue is that they are conservative. They're fiscally conservative. So they don't want to ruin their reputation, and losing the presidential elections, getting rid of Trump is worth it when you compare it with losing the entire reputation of the party. And of course, Mitch here is looking for his own ass and the rest of the GOP senators and Congress people, because they have elections of their own. And if they do pass a stimulus deal, basically bowing down to Nancy, and the deal is over $2 trillion, and these are the conservatives, they will ruin the reputation and they will lose their elections. So that is the battle here between Trump and his own party. McConnell, of course, saying, hey, if they give us a bill approved by the president, we'll take a look at it. But for now, I'm passing my own bill, the skinny bill, which is $500 billion, and it takes care of another round of the PPP loans, but no stimulus checks. Believe it or not, lots of Republicans, at least in the polls, are saying that they do not support another round of $1,200 because when you look at the data, the retail sales data, and all the good corporate earnings data, you would assume that the consumer is flush with cash. So why would they need another round of $1,200 each? Maybe give it to the people who need it the most, who are behind on rents and bills, but don't give it to all the morons who are gonna buy calls on Robinhood and buy iPhones. That is not needed. But there is another side of that coin that it could stimulate, and it will stimulate the economy further. So two sides of the debate here, but if the Republicans passed Nancy's bill, they pretty much erased their entire conservative legacy. And to that narrative, of course, we heard from Senator Mitt Romney, and he says anything above $1.8 trillion, he's not going to sign on. And I believe that there are more Republican senators who will refuse to sign on any bill over $1.8 trillion, or at least perceived as excessive. Again, they want to protect their own ass and the party's ass. And the last thing we heard here about the stimulus circus is Nancy, after she called Mnuchin, she's now saying that we are moving closer. So it's been over a month right now, and they're still moving closer to each other. Turtle steps one at a time, dragging the talks as far as they can. But moving on, let's cover some news about certain corporations here. We do have Goldman Sachs paying a $2 billion fine for their crimes in the 1MDB scandal in Malaysia. So $2 billion, and they wiped the slate clean. Moving on, we heard from ExxonMobil. Of course, the president touted that Exxon executives and CEO in this case called him, and they are donating to his re-election campaign. And Exxon, of course, released a statement. They said, let's just be very clear here. There was no call. The call never happened. The president is imagining things again. This is the same issue of China called. Remember China called back in 1819 when he wanted to save and prop up the market? China called. And China, of course, said, Doug, we didn't call anybody here. We don't know what he's talking about. And Exxon, of course, saying the same thing. There was no call. And speaking of Trump, of course, let's talk about farmers. The net income of farmers has increased to the highest level since 2013. Now, you might say that this is good news, but bear with me here, because when you look at the data, the majority of the increase in farmers' income came from the socialist payments that the Trump administration is giving to farmers. So it is not because their business is thriving. It is because the government is upping the pay and the bribes to farmers. And right away, you see the impact and the results of these bribes, and farmers right now are sticking with Trump. They're saying that they will vote for Trump this time around, even though he destroyed their businesses. But hey, sitting on your ass, watching television, and cashing a government check, it certainly beats sitting on a tractor all day harvesting crops. And that, of course, reiterate the importance of passing the stimulus for the president. You get a $1,200 check, it says from Trump on the check. Guess what? Lots of people will vote for Trump because Trump gives us money. That's the thinking right here, and at least it is working with farmers. And by the way, just to illustrate the importance of stimulus, here's a survey when Americans are asked, how are you paying for your expenses right now? What is the source? And you know what came out number one? Stimulus. This is the importance of stimulus. The entire economy, the zombie economy that is, has been revived based on stimulus. And now we're running out of stimulus. We need another round. When we're done with this round, we'll need another round and another round. And of course, you heard the Fed chairman, Vice Chairman Clarida saying that this scam will continue to go on and on and on because a breakup of monetary policy support from the Fed to the government and the economy is not foreseeable at all. And here is the last bit of news that we've heard, and this is very important, of course. The Department of Justice is now launching an antitrust suit against Google. So Google is the first to fall here. Facebook will be next, perhaps Apple, and the rest of them. And this will be the future of the technology sector in America, in Europe, and everywhere else. If you think that you're just going to dump your money on a bunch of tech stocks and you'll do just as good as you did in the 2010s, forget about it. The 2020s technology, in my opinion, will lag and will not grow due to number one, valuations are overextended. They're already counting 5, 10, even 20 years ahead of time worth of returns. Furthermore, you do have all this scrutiny from governments around the world, whether launching antitrust probes or overtaxing US tech companies. And I know morons like Jim Cramers of CNBC saying that, breaking up the companies is pretty good because he's assuming that, of course, breaking Google into the ad business and the YouTube business will again accelerate the growth, and the Robinhoodians will flock into buying YouTube stock and Google ad stocks instead of Google as an entire company. That is a false narrative, and once the hammer comes down on the tech sector, all of them will lag. All of them will see a massive sell-off. The accumulation during the 2010s will be dumped in the 2020s. And right away, Google responded, of course, saying that the lawsuit is not fair and yada, yada, yada. Of course, they have to defend themselves. Yet here's what happened to Google stock today. It rallied. It exploded to the upside on antitrust lawsuit optimism because this is the zombie mentality that we're dealing in with the Robinhoodians in the market. Of course, they do have the donkey mentality, which is buy first, ask questions later. And then you have the zombie mentality, which is good news is good news and bad news is even better news. Buy. But let's move on and cover some earnings that we had today, starting with Procter & Gamble, which had a very good earnings report. Of course, the stock is very overvalued, but we'll think about that later. For now, let's just pump it and continue to pump it. But they had good earnings nonetheless. Earnings coming at $1.63 a share and the revenue at $19.32 billion. Their sales were up 9%, and here is the breakdown of each segment. Right away, you see the fabric and home segment amounted for a growth of 14%. And then we had Lockheed Martin. And Lockheed, of course, their performance will be locked because they're tied to the government, so no surprises here. They'll continue to grow, even though gradually. But the most interesting segment in their business is the new space segment, where it is actually not new, but they added more investment, significant investment in the space segment due to the Space Force that was launched by this administration. And the concern here, whether the space segment is profitable or not. So let's review the results from Lockheed Martin. Here it is. The year-over-year growth in terms of sales and revenues are up across all segments, including space, but most importantly, of course, aeronautics, because this was a segment of concern, yet they managed to grow year over year. However, when you look at the net income and the profits here, you see that the space segment is not profitable year over year. And of course, this is a name that will be sold out if we assume that there is a blue wave. Whether that's true or not, it doesn't matter. This is how investors will think. They will think if Biden wins, that would be bad news for the entire defense sector because they will reduce defense spending, and therefore you have to sell Lockheed Martin. And you saw that the shares of LMT today trading severely in the red. And moving on to some earnings we had after the bell, starting with Texas Instruments. The earnings coming in at $1.45 a share and the revenue at $3.82 billion. And they are attributing the good results here for the growth in demand in the auto segment. And of course, their core business also did well, growing 18%. Now, when you look at the numbers year over year, you see that the revenues are up slightly by 1%, but the net income is down. So last time I checked, the shares are trading in the green after hours, but these results are not very impressive. They're neutral at best, and the stock, of course, trading at a slightly higher valuation than usual. So don't be surprised if TXN gets sold tomorrow. And of course, we do have the big kahuna, Netflix. Netflix, last time I checked, is down over 6%, at least at the time of the recording of this video. And here is what happened. The earnings came at $1.74 a share. The expectations, of course, were $2.14. So well below expectations here. And the revenue came at $6.44 billion, yet the subscribers disappointed. Only 2.2 million gained this quarter versus expectations of 3.3 million. This is not a surprise, of course. Netflix told us last quarter that it would be the peak and their growth will continue to slow down from that point on. So they basically told you, don't buy calls and sell our stock. In essence, yet the morons, of course, bought Netflix, and today they bought lots of calls, assuming an upside for the shares after earnings. These, of course, all will expire worthless. So sometimes you have to listen to corporate executives. But out with the bad and in with the good. And let's talk about Snapchat. The earnings after the bill, of course, the shares of Snapchat, last time I checked, up very big. Of course, due to the beat in the revenue. The revenue was 678 million, well above expectations, and earnings came at 1 cent even. But that was well above expectations as well because the analysts were expecting a loss for this quarter. Furthermore, their daily active users are 249 million, well above expectations too. And it will be really interesting to listen to the call to hear whether Snapchat gained more users, or let's say some users moving back to Snapchat after the whole TikTok ban or the threat of the TikTok ban impact their bottom line. That would be very interesting to hear, but of course I don't have the time to do that because I'm recording this video. So let's move on to the heat map analysis right away. You see it is a green day overall, with very few pockets of red, but it remains muted because we had a big pump, the Nancy pump, when she said she was optimistic about a deal, and then we didn't hear from her after that, and the market decided to sell before the closing bell. You see banks doing all right, big tech doing good, specifically Facebook and Google, and we have China-related stocks, Alibaba, JD, all got upgrades from analysts today, and they're doing pretty good. We also saw the reopening trade catching a bit today. Hotels, casino, cruises, airlines, all in the green today. And look at beer having a good day. And of course, General Motors, very, very big day for GM today. What about the laggards? You see Intel had a good day or outperformed yesterday. And today, after digesting the news of selling their memory unit, traders are fading the name. And of course, we do have Okta in the red big today. Okta, of course, is the most overvalued stock in the entire stock market when you look at forward PE ratios. IBM in the red today due to their earnings yesterday. LMT, Lockheed Martin, we talked about that. And look at tobacco, Philip Morris also reported earnings today and they're trading in the red. We saw bullish activities in the options market regarding Philip Morris, but these were losing bets. What about Tesla? Tesla is in the red today. Tesla reporting earnings tomorrow. A little bit of nervousness here in Tesla shares. Moving on to the rotation trade, and right away you see the reopening stocks outperform the stay-at-home stocks. The notable decliners, of course, in the momentum names are Zoom and Tesla. We talked about Zoom's valuation yesterday and how ridiculous it's getting, but I did try to call the top in Zoom multiple times with no success. So the name will have its day of reckoning. When will that happen? Who knows? Looking at the other side of the aisle, the reopening stocks, we talked about General Motors, up big today. Six Flags also big. However, this name fluctuates very big between gains and losses, so it is still not a buy here with the current conditions. Marriott outperforming today, so did Live Nation, MGM, Coca-Cola. Of course, I do have Coca-Cola in my portfolio, and they are reporting on Thursday. Moving on to the technical analysis, covering some charts and starting, of course, per usual with the SPY, the S&P 500. Here's a 15 minutes chart. What do we see? We see trading in range, and you see the support and resistance level that I outlaid for you holding to the penny. The levels, of course, you see the range between 342.39 and 346.85. Right away, of course, I'm highlighting the Nancy pump because the market was fading until Nancy decided to pump the market. However, the pump reached all the way to the resistance level I told you about at 346.85. The SPY got rejected from that point on and faded all the way to the closing bell. What do we see from a daily perspective? Nothing new here. We're in no man's land. We're just hanging there waiting for the outcome of stimulus. I can't even give you any support or resistance lines beside the ones you saw in the 15 minutes chart because we're at the mercy of the stimulus outcome. We could gap down or gap up depending on the outcome. So let's move on to the Qs. Right away, 15 minutes perspective, and I made an error in making this chart. I included yesterday's activities in today's action, but today's action starts where it says 20th. Because this is the date of today. And right away you see that we gapped higher just by a little bit, but we struggled here between the support and resistance levels, the support being at 383.38 and the resistance at 286.28. And let me switch to a 5 minutes perspective so I can show you how accurate these levels are. And you see how they acted and switched between support and resistance as the shares traded up and down through them. What do we see from a daily perspective in the Qs? Again, we're in no man's land. We're waiting for the outcome of the stimulus. What's going on with the cup and handle formation? Still possible, but we better start moving higher very soon. Moving on to the Dixie. And here we put our Sherlock Holmes hat on because we're trying to figure out which indicator is lying. The dollar index collapsed completely and it got rejected from its former support of 93.50, yet it caught support today from the support level of 93. This move in the dollar index saying that stimulus will pass and we will have a stimulus deal. The market is confused. Yesterday it told us there is no deal, today it told us there is a deal, then there is no deal, and it's going back and forth. Gold is staying muted, not telling us anything, so we're not going to cover gold, but let's move on to the VIX. The VIX is saying no deal, because the VIX is popping higher and it managed to close in the green today, and you see the bull flag formation in the VIX playing out to the upside. So who's lying here and who's telling the truth? Moving on to some individual stocks here, starting with Apple, 15 minutes perspective. Right away you see the level of 117 acted as resistance in the beginning of the day, and after the pop of Apple, the Nancy pump that is, the 117 acted as support all the way to the end of the day. So we'll watch this level very closely, but it is a soft support and soft resistance. It is not a hard one. What is the difference between soft and hard support and resistance levels? That is the topic of another video. But for now, we're moving on to Tesla. Here is a 15 minutes chart with no markings or annotations by me beside showing you where today's activities took place. And now here I'm showing you how the resistance levels work today, specifically the 425.30, acting as resistance in the beginning of the day because Apple, or rather Tesla, had a pretty bad opening right away. And then as we saw the Nancy pump, it managed to break above this level and the 425.30 acted as support. However, Tesla managed to dip below it and now it flips back to a resistance. Remember, the 425.30 was a very important level for Tesla to hold, and it did not do that, which is very bearish. And the shares are showing lots of weakness in this point. Of course, when we look from a weekly perspective, you're seeing, just like in Apple, a bear flag formation that should play to the downside. Of course, the name is reporting earnings tomorrow. Very important day for Tesla. But let's move to another auto manufacturer, General Motors. And you see GM, of course, been outperforming Tesla shares since the beginning of September, outperforming significantly. General Motors up over 20%, Tesla down over 15%. But here's the chart of GM. Right away you see the trend line, and I started accumulating shares when we dipped back to the trend line back in July. So if you followed my advice and you bought GM shares back then, you did pretty good. And that is the good news. The bad news is I dumped a bunch of shares today, taking some chips off the table, because the 32.88 level was the resistance that I was looking for, and breaking that level significantly, just like we did today in 1 day worth of activities, usually, and I say usually, results in the shares coming back to the line of 32.88, retesting it before bouncing back up. This is what you want to see if you are a GM bull. What you don't want to see is the shares going back to 32.88 to retest it and then failing and trending lower. So I'm taking some chips off the table, waiting for the retest. If we see the bounce again from 32.88, I will know that this level will hold and will become solid support from this point on, and I will add back to my shares in General Motors. And the other thing, of course, back when I bought the name in July, I was warned that I'm making a big mistake and GM is declining and it's a dying company, etc., etc. And now they're all having a big party. You saw the action in the options market and the analysts on television talking about the electric hammer and the future is electric for GM and they're taking the right steps. I told you that 3 months ago. I told you about the electric hammer 3 months ago, and it was a part of my thesis in buying the name. And now let's move on to conclude this video with an earnings preview for tomorrow's reports. We do have Las Vegas Sands, and the most important thing I want to look for here is the business in China. Are we seeing a recovery in the Macau business? Of course, all the reports we've heard from Macau are negative, but any slight and a hint of a rebound in the Macau business will lift up not just Las Vegas Sands, but Wynn Resorts and even MGM. Now we do have another name here, Abbott, and what I want to see here in Abbott is the new testing kit. We heard about it once they announced it, which is a 15 minutes rapid test. We want to see the developments in this test and how fast it will get to the wider market. Now, what's going on with Tesla? We heard bad news for Tesla that the registrations are down over 13% in California, down in China, and down in Norway. And they're losing the competition to the Polestar and the Audi and other competitors in China, of course, NIO. How would that show up in Tesla's financial results? Furthermore, I want to see the impact of all the mania and stupid statements that came out of Reverend Elon Musk's mouth, because his core customers are a bunch of hippies from Berkeley and Norway. Yet he goes on with these very controversial statements, and I don't know if he's a MAGA guy or whatever, but that is not going to bode so well with your core customers. So are we seeing potential customers choosing another competitor beside Tesla? Is that a part of the purchasing process at all? Of course, Tesla is very secretive about their results. They only provide just a little bit, but we will read through them and make these conclusions. Now, what about Chipotle? Of course, we've seen lots of reopenings across the country. How did the reopenings and going to restaurants impact Chipotle's growth? Very important to watch tomorrow. The name, of course, is very overvalued, but it is a momentum name. What about Whirlpool? As I explained to you in previous videos, that we're seeing different phases of the COVID lockdown consumer behaviorism. And of course, during one of the phases, when we realized that we're staying at home for longer than we expect, we decided to remodel and buy new appliances. We want to see if that boost is fading and if we already peaked in appliances sales. Whirlpool report would have a critical impact on the shares of Home Depot and Lowe's. Now, the last two names we have here, Lam Research and Xilinx. Of course, we've heard from Texas Instrument So are these two names just gonna rally before reporting earnings? And if they do, that puts them at risk of being sold off after their reports. So you gotta watch out here. If you see Lam Research rallying significantly in the morning, you might want to push the brakes there, take some profits, because usually when that happens, the stock will sell off after its own report. That's all I got for you for now. And of course, we will review all of these earnings individually when we have the results. If you found the information presented in this video helpful, please subscribe, press the like button, the notification button, and follow me on social media.